my best to get through this with the way my voice is. I want to thank you for tuning into the Midday Market Report. It's Monday, September 25th, 2023 at 3:14 p.m. Eastern Standard Time. I'm XRP Future Millionaire, and I reside in the great state of Michigan. Crypto Bob, welcome in. Hope your week starting good. Mine's starting off pretty good. Can't complain. My voice is probably only giving me about 10 minutes to go through this market report, so I'm going to do the best I can. The Dow's down 63 points. It's had a heck of an up and down here today. JB Blaze, what's going on? Not a whole lot, my friend. Not a whole lot. The Dow, though, it's broken down here. As we ended last week on the midday market report, for anybody who's been paying attention, we talked about how we could start breaching this to start the week. And if we do, and that plays out like an M-topping reversal, this should bring us down to about 32,600. Now, you can't know that if we're going to have a breakdown like that to start like a big reversal here until we're on the 200. Are we going to get a back test, or does this just form another bear flag here and then down? You know, that's what it looks like we could be doing. That looks like the start of an M-topping reversal in the daily. And then if you do, well, it didn't extend that far. It's on the 200 day. If you ride out, even if you pump out, but you don't break out, you're going to end up doing something like that. Now, just consider if these do pull out, maybe it could do something crazy. So you're looking for either a breach and rejection at the 200 day or a firm rejection on this broken structure to confirm this breakdown. But right now, this is the first step of what could be a rather significant breakdown for the Dow. The DXY is at just about 106 as it broke over that 106 handle today. It's up about 41 cents or 0.40%. We have our technical move on this next little break up to the top of the channel. We measured it out, and it should get us to about that 106.74 area. So we're trending up in that direction now. As we know, we have a golden cross in the daily, and that's already been confirmed in the weekly. We're trying to re-push up. I think this is going to be one last push up for the dollar. Now, can we get up to 109.20? That's the big question. And then if we slingshot out of here, and let's say we have a melt up, the top I could see us going to in a melt up scenario, if you could break these 3 layers above there. I don't know if they can get us to 154. That would be a lot of manipulation going into it. But could they push us to 109 or maybe up to 114 or 120 possibly? But it's going to be very, very difficult to do. Terry, welcome in. I appreciate you being so excited about joining on the midday market report. Only about half the people that usually watch my content will watch the midday market report. This will be lucky to get 550 views. But I'm going to do it every single day because I believe in it. So that's what's going on with the DXY. Simon, I'm doing great. Thank you very much. Hopefully you're doing good as well. Just my voice is only going to give me about 10 minutes here on this live, so I'm going to do the best I can. The U.S. 10-year, crude oil, just under the 90 handle. Glad to hear that, Simon. It's at $89.75 right now. We're rounding this bottom very nicely. We've got our big resistance here at 93.73, which we haven't been able to break yet. We have reversed this all the way through, and it looks like this rounding of the bottom is going to continue. And the first layer is at 93.73, but I think we're going to end up trending as this plays out to 111 and then probably up here towards 130. Ben, welcome in. Good afternoon. Thank you so much for tuning into the Midday Market Report. I really appreciate it. Moving on. So that's crude oil. So hopefully it plays out in the way we're seeing. Nothing changes. That would let us know the U.S. dollar is going to continue moving on. Like I said, crude oil is probably going to go through some kind of parabolic spike here in the near future. The 10-year government bond's the one we're worried about. See, we've got this swinging out here on this bullish handle, which it's already swinging out already. And that should get us, like we said, about, where was it at? It's right about there. It's about 5.085%. Imagine the 10-year going up to 5.085. That would be insane. But that's what it looks like we're trending towards. So this is absolutely rounded the bottom. And if we get up there to the top of this cup, then we're going to see how much it's really going to go. They're trying to entice anybody who's holding their bonds to hold them. That's all that's going on here. As we're buying up our own government bonds, we got other nations buying these bonds. So on the 10-year, it continues to move up. So me personally, I it just doesn't seem like the right play. Gold down $8. I talked about how it's going to be under pressure this week, especially if the U.S. dollar is going to do what it's doing. We've gotten almost to the top of this formation. We know the technical breakdown, if we were to break the structure, is 1792. If we break up, it's 2029. Right now, we're being squeezed by this descending triangle, you could call it. And it's got about a 1933, 1935 top. I will say 1940 right now. Top end. But the fact we're under the 20-day and the weekly, it tells me we're probably going to start reversing at some point. But if we can break this structure and start breaking out, you could get to 2029. It's just going to take some work. I think we're more likely to come down, not to break down, but more likely to retest the bottom here at like 1870 area. Yep, absolutely, Terry. Absolutely. Because they're offering right now, it's inverted. You can get 5.3% right now. And I know the 2-year you can. And I think the 6-month as well, you get over 5.25. So I don't know why anybody would risk the 10-year when you can get that in 2 years or 6 months. That's you don't want the yield curve inverted, and it's very inverted right now. So that's what we're seeing with gold. Silver's pretty much the opposite of gold because it's on the top part of the formation. They're both looking rather ominous right now because of what's going on with the U.S. dollar. Silver, I will say, has a better chance of breaking out than gold just because it's on the top of the formation as it's on the breakout side and gold's on the breakdown side. But they're both within a similar structure. This is just coming off of more of a bull flag. If we can hold these first layer here, 2253, or at worst, 2226, technically we could try to make a breakout. A breakout fully out of this structure is $28.31. A breakdown is $18.07. What metrics are in play that makes the DXY soar when the rest of the world is ditching it? Very easy. The government likes to print money, and they overinflate the books, and they overvalue the worth of certain things, so it overinflates the U.S. dollar. Basically, they just pump up the dollar. They're basically just pumping it into infinity by adding to the liquidity pool. That's the simplest terms. They add liquidity to the pool, which makes the price seemingly go up on a short-term rise. But after that inflation is accounted for, it always comes down 10 times more. So sure, they can have this short-lived 2023 rally, but come early 2024 to mid-2024, I mean, we're going to have to look out below. I advise you have a storm shelter because it's going to be ugly. But silver looks like it could actually break out too. See how it's on the top side. So, despite the market being what it is, there's still opportunity. The gold-silver ratio is at 82.8, so silver's a fantastic time to buy. I don't necessarily pay attention to the price of silver. I pay attention to the ratio being 80 to 1 or more, because then when it gets to 40 to 1, I can trade 40 ounces of that 80 ounces of silver, keep 40 to myself. You can walk in any local pawn shop and do this, and you take 40 ounces of silver, and you'll get an ounce of gold, as long as they deal with gold and silver bullion. You won't get what you paid for spot price, but you're going to get the true value. If it's 40 to 1, you can bring in 40 ounces of silver and say, I want an ounce of gold, and they'll do it. Vice versa, if you want to switch it out for gold and the silver, they'll do that too. But that's what I do. So, yes, I have gold. I like buying it at times, but I like to save it up, the silver, and then trade it out. There's no demand for the U.S. dollar. I hate to break it to you, Terry. There is zero demand for the U.S. dollar. Other countries are dumping out of the dollar as we speak. It's overinflated only by the metrics we use because we're overinflating it. We're the only ones buying the U.S. dollar. Nobody is actually wanting the U.S. dollar. They're finding ways to get out of it as we speak. And start 2024, January 1st, they can legally, a part of the BRICS agreement, they can start dumping the U.S. dollar and stop formally using it for petro. So, we can think whatever we want, but that's what's happening. And I don't believe there's no demand for the dollar. We don't even have demand in our own country. Nobody. The reason why there's no demand, Terry, in other countries is it's underinflating their dollar. It's underinflating their own native currency. So now it costs them more to buy their stuff because they're using the greenback for petro and for goods. I mean, it's a disaster. Everything you're not supposed to do when you're the world reserve currency, we've done, especially under this administration, which it's all by design. So, but I appreciate everybody tuned in for the midday market report. Make sure to hit that like button. My voice is getting pretty bad. I want to end with XRP. We're at 54 up 0.66%. And there's many ways you can look at this. I don't want to look at the FUD right now. There's many ways to look at this. We are in a rising channel short term from June of 22. We failed to break the pivot level at 524. So that would suggest underneath we've got the 408, 406 level. But before we can get there, remember this formation. I'm going to keep pointing to it till this breaks down or breaks out. This is what we did. We knew we were going to have a retest down here because we broke this little short-term rising channel. We talked about it all weekend. I came on live a couple times, especially last night at 2 a.m. I came on live, and I showed this exact move. Now, could this be making a hammer candle? Possibly. The problem is it's a bearish hammer candle right now. So be very careful because everybody's going to say all the time there's a bearish hammer or a hammer candle. Yes, but right now it's bearish, which means even though it absorbed the losses, it could not reestablish a new high on the candle. That's very bearish. So we'll see what happens here. We'll see if this can turn into a bullish hammer. But as of right now, this is still a bearish setup. And we can still bounce around in here. But once you break this, your next tier, it's simple. 47.7. Then you come down here to about the 44.4. And this is just showing you every possible scenario as it comes down for the support in these pivot layers from the structures. Then you know the rising channel from June of 22 is at 406. And then underneath that's the 2020 uptrend down here at 38.2. Tanya, welcome in, love. I appreciate you tuning in. You're going to have to watch from the beginning because I'm just ending because I can't keep talking. My voice is just, it is what it is, but I got through everything I wanted to. And then that's it. So thank you, everybody. Make sure to hit that like button. I appreciate each and every one of you joining in on the midday.